Hi, I'm Daryl Hemingway.
And I'm Cord Lemon.
And we both love real estate. Oh, that was terrible.
Cheesy. I've had about 25 years of experience in Canadian real estate. But I'm now into US real estate as well.
I'm a Canadian professional real estate investor, and I also have many years invested in the US as well, as a US permanent resident.
Real estate is one thing that can give you monthly income.
Like passive income from rental properties or lease-to-own properties.
Big influx of income.
Like flipping a property.
And set up your retirement so you don't have to worry that you'll have enough CCP coming in.
So you can retire when you want on your terms.
Too many people won't have enough money to retire on. Their RSPs and pensions have taken a beating in the stock market.
Tired of the corporate rat race, I discovered that real estate can provide me with passive income and long-term growth. By using unique tax strategies and helping to accelerate my mortgage, I am able to provide myself a retirement portfolio that generates high net worth.
How cool is that?
Very cool.
Daryl, where have your purchases been?
I've invested in the United States in Maryland, Pennsylvania, and Arizona.
And what kind of deals were those?
I used different strategies depending on whether the market was going up or whether it was on the way down. I bought properties at auction, I did fix and flips, and I bought a lot of rental properties which generate cash flow.
Are there still good deals down there?
Are you kidding? The biggest sale since the Great Depression is happening right now.
Yes, there's gold in them thar hills.
Yes, that's what brought us down there. The gold in the US properties, that is.
Have you experienced frustration finding cash flow properties in Canada?
We have.
Over the past approximately 10 years, I have spoken to many investors. And the common problem for most is that they have so much trouble finding a cash flow deal that doesn't break the bank to buy.
Even more so since CMHC changed the rules for investors in April of 2010. They require now a 20% down payment. Also, the qualification for a mortgage just got tougher. And the rental income that you may be receiving from your other properties won't count as much toward the credit you need to qualify for that mortgage.
Yep, that sure makes it tougher being a real estate investor. So based on the infamous investor's motto,
buy low, sell high.
And since there was the mortgage meltdown and tons of foreclosures down in the US, I figured it was time to pick some low-hanging fruit.
Hello.
So I teamed up with Daryl, who was not only a successful real estate investor in Canada, but had also bought a lot of properties in a number of US states.
During the boom in the US, things were going well. I bought a number of investment properties and it was making good money. In 2007, I looked at another property and I went to the local banker to get a mortgage. He told me he would give me an $830,000 loan without any documentation. No information on job or assets or income.
Crazy! But you knew something was up.
Absolutely. At that point, I knew that there were some problems with the US banking industry, and I started selling my properties and decided to leave the US market and see what fallout would happen.
And what do you know? He was right. So what'd you do next?
So I moved back to Canada after I sold my last property in the US, and I teamed up with our other partner, Michelle Tavares, and we started buying properties in Ontario. But over the last couple of years, we found it's getting harder and harder to find great cash flow properties here.
For instance, I could buy this rental property in Toronto today, but I'd have to put out over $100,000 of my own capital.
Exactly. And then it's not really a good deal because your return on investment is so low. And after one or two properties, you tied up all your capital. And how are you going to buy more?
A common mistake of most real estate investors.
You can only do so much with limited capital. And that's when we started looking at trends to find better deals.
Just like the stock investors do, like analyzing the Dow since the year 2000.
You'll notice that if you invested $1 in the year 2000 and let it ride,
like a lot of people have done with their RSPs and mutual funds,
you'll see that by the year 2010, you haven't made any gains in the stock market. Zero, nada, zippo.
That sucks.
And that's not accounting for inflation. So in reality, you've actually lost money.
Ouch! That really sucks.
So again, looking at the chart, the year 2003 and the year 2009 would have been great years to buy, and 2007 and 2008 would have been a time to sell.
Buy low, sell high.
The Standard & Poor's chart tells a similar story, as you can see.
So we need to look at similar data to help us with our real estate purchases.
Exactly.
History repeats itself. There have been 3 booms and 3 busts in the last 50 years.
So with the right information, you can see this stuff gets pretty predictable.
That is correct. So we can use this knowledge to our advantage.
A lot of the Canadian properties we purchased over the years have been in the GTA.
Greater Toronto Area.
You can find a chart which depicts appreciation trends in your area for any large city, and you can get those at City Hall or from your local realtor or CMHC.
This particular chart is a 50-year history of Toronto real estate values, which shows a constant appreciated price going from under $100,000 in the early 50s to about $370,000 in 2009.
If you notice, the major peaks in the market were in 1974 and 1989.
A great time to sell.
Gord, weren't you holding properties then?
Yes, I bought these properties from a builder. It was going to take a year to complete. The year was 1989. And I'm holding these properties, and what happens? The bottom falls out of the market.
What did you do then?
I was contractually committed to purchasing them from this builder, which I did, and tried to get rid of them, and I couldn't give the things away.
An expensive lesson.
Very expensive. I realized when I was starting out as an investor that I was merely a speculator and not an investor at all.
That kind of thing happens to so many people who are uneducated, who jump into the real estate market, buy when it's hot, put down their hard-earned money, and go home, and all they can do is pray that the market keeps going up. They're speculating, and more often than not, they get caught and they lose their shirt.
It's quite a similar picture to what's been going on for the past number of years. Prices were going up, so I jumped on the bandwagon. And what happened? I got caught holding the bag, prices fell, and so did my bank account.
What's happening right now in a lot of Canadian markets reminds me so much of what was happening in the US in 2005, 2006. People were so sure the market would keep going up. And as we saw, what goes up must come down.
As a speculator, I only had plan A. I didn't have plan B. So I was only making money if prices went up. When prices went down, no plan B.
Like those buying pre-construction houses and condos.
Sad but true.
You've come a long way since then.
Thanks, my friend. Anyway, back to the chart.
So in real estate, 1964, 1985, and 1996 were excellent times to buy.
The markets were way below the trend line. I mean, can you imagine if you bought 2 houses for $200,000 in 1985 and sold them at the peak in '89? Man, that's $200,000 profit on each property.
And a similar story if you bought in 1996 and sold in 2007.
Everything's great when prices are going up, like they have been in Canada for the past few years.
Ka-ching! Not to mention tenants paying down your mortgage.
Sweet! We've now experienced the longest upward trend in the GTA that we've ever seen, as well in many other places in Canada.
Like Calgary, Vancouver, Edmonton, Saskatoon. So even though we are seeing a slowing of the market in Canada with higher interest rates, new CMHC rules, and a slow economy, prices are still high, and investors have to buy here at the top of the market.
Won't make that mistake again.
And about a year ago, we decided it was time to test the waters again and head back down south to the US.
Just like 1985 or 1996 in Toronto.
So first we had to do our homework, and we looked at a number of trends using charts similar to the ones we saw in order to find a low point in the US market that was about to begin its recovery.
Where there are high rental demands and where there are abundance of properties, like 30 to 70% below the cost of construction.
Yes, 30 to 70% below the cost of construction.
Cost of construction is something we don't even talk about in Canada.
That's right, but it's an important consideration when we're buying in the US market today. Just think for a moment, can you imagine buying your favorite car at 30 to 70% below what it cost the car maker to build that car? That's a great deal in any economic times.
We're buying properties at year 2000 prices and below.
$30 to $60 per square foot, where the average cost of construction today is about $100 a square foot.
Such a great deal!
In some cities in the US, we are currently buying properties that will generate double-digit returns from cash flow alone. And if we buy them in the right locations, their future appreciation will increase our returns tremendously.
And this is at a time when both Rental prices are down and property prices.
When was the last time in Canada you heard anyone talking about buying below the cost of construction?
And because of the demand for new housing in a lot of areas as a result of immigration, existing properties will appreciate. It's predictable, even based on the US economy right now. Know what I mean? Know what I mean? You know what I mean.
Ultimately, appreciation is predictable based on market fundamentals. We know that new housing construction cannot begin until the existing home prices come back up near that $100 a square foot.
But the most important thing, cash flow. So with so many US properties offering double-digit returns on cash flow, we decided to go south. But we needed a team and a system.
That's right. As far as teams go, we went through a lot of experts before we found the real experts that could do the job, could be reliable, and that we could trust to have as part of our team.
As a Canadian, we had to be very aware of the many pitfalls that we as Canadians can experience when investing in the US.
There's so many things to know, knowing the right people, having the right team, understanding the process and how it differs from being in Canada. After having gone through that ourselves, we realized that we could help a lot of the Canadians also interested in US real estate and save them a lot of time and trouble and lessons learned the hard way in order to be successful.
That's when we decided to put knowledge, expertise, and our team together in order to help other Canadians reap the benefits of this once-in-a-lifetime sale.
We spent a full year and tens of thousands of dollars on experts to learn what we needed to know to be successful in the US market. Not to mention learning a few lessons the hard way.
Not much fun getting all your profits taken away by the taxman because you didn't set up something properly.
Not to mention saving fellow Canadians from some of those great opportunities on Florida swampland.
We've seen some horror stories of Canadians getting hooked in with the wrong kind of deals and really getting burned. For instance, getting hooked in with some companies that bulk buy these properties from a bank and then passing these on to Canadians for $20,000 or $30,000.
The issue in this case is that people were expected to invest their money before even receiving the address for the property. They made their payments. Months went by before they ever found out the address of the property, and in many cases they found out the property had been abandoned or was missing some things.
Like a roof. Seriously.
Hello.
We've seen other Canadians go to the US on their own, go to an auction and try and buy a property.
This is not for the faint of heart.
They didn't do their proper due diligence, and as a result, they didn't account for getting a property with tax liens, structural issues.
In any case, there are many people buying properties at auction and overpaying for them.
You really have to understand the auction process because although there are great deals to be had, you are surrounded by sharks. So you have to know the process before dipping your toe in the water.
Oh, that was a joke based on the shark thing, right?
Canadians have also bought property for the buy, fix, and sell thing, but they've hired contractors that have gone way over budget, and of course that's completely killed their profit.
So many things can go wrong if you don't have good local knowledge or a good team in place to help you.
So if you think about the worst area of your city, you know, where there's gangs and drugs and stuff like that, would you buy a property there? But if an investor from out of the country was given a deal in that area, how would they know any different? You know, the realtor says, great cash flow, high density area, always rented. That investor might buy the property sight unseen.
Never buy a property sight unseen, and never buy property without doing your due diligence.
That's why you need to find a team that you can trust with lots of experience and knowledge.
Local knowledge.
To help you with your real estate investments and your financial future.
Some of the tools we use to take a first look at a market include internet tools such as Trulia.com, Zillow.com, which both give good housing statistics, and RealtyTrack.com, where information is gathered from realtors nationwide.
Take a look at some of these sites and get yourself acquainted with the US market. You know, this really is the biggest real estate sale of our lifetimes. How are you going to take advantage of it?
Watch for our next video where we talk about where we are buying in the US today and what types of properties we're buying and why.
But the most important thing,
Buy low.
sell high.
See you then.